Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, January 10th, 2022. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, seeing early selling pressure here to begin the week, below currently the previous week's low and pushing downward. Additionally, you can see this level right there. That's the 46.45 half level. That level is basically the previous month's midpoint. So this is a very important kind of do or die zone here for this one, as a rejection of these prices and a strong close away from this level today could lead to a bounce back toward highs. And now we're holding within the previous month's upper range. But if there's a failure at this level, again, that's where you start to see a return back toward the previous month's low price. That's going to be about 44.92 in the zone. Additionally, if you're going to fail at the previous quarterly high and close, then there's a tendency to return to the quarterly mid, and so far that is in play as well. So right now, while we're starting to push through a very important monthly key level there, a failure to reject this zone right now could continue to suggest more weakness ahead. Additionally, given the previous week's weakness here, any bounce could still be seen as a selling opportunity for new lows until we see a significant reaction or rejection of some sort. All right, taking a look here at the NQ. Similar type of price action, but much more selling pressure than the ES. You can see here, began last week with a failed new high, sell signal at resistance, and a major sell-off downward. And we're now pushing through the previous month's low. Right there, that's the break of the previous month's midpoint, and it opened up a push into the previous month's low. That's similar to what we're talking about right now with the NQ, with the ES, but obviously the NQ already pushing through very nicely. So we're getting into the spot here where we could begin to see a nice little reaction. 15.2 to 15K could be a zone here where perhaps a bounce or a low comes into play and we start to push higher. But if there's a failure to reject this low and this midpoint here, again, the next level down is going to be the quarterly low, and that takes you back to 14.4. So how far are we going to continue to pull back here? When are we going to see a major reaction of some sort? Again, right here, this is our market structure zones, and the fact that we have broken down below that 15.8, 15.7, 50 zone, any pullback into that zone could still be sold for this area, and again, that could be perhaps a buy back up. So how much more downside are we going to see here out of the NQ? Clearly, the failure at this market structure right here is very significant, and if there's not a reaction in the LVN, this could really open up more downside into last year's closing value and the previous quarterly low, in addition to that major significant LVN down below. All right, let's take a look now at crude oil. Here's crude. You'll notice right here with crude oil, very strong lows the last two times around. This recent week, we got a pullback into this pivot range here early, and a big squeeze, a big move into 80.47, and now again, we seem to be transitioning to upper market structure. So from the 76 line right here, we can draw a line from 76 over and one from 86 over. We traded in that 10-point range before. We traded in the range below it before. We transitioned back into this zone here and traded some below here, and now we're breaking back above. So theoretically speaking here, we could pull back as deep as 75, 76, this zone, and still begin to make a move toward 86 and trade in this area. So 76 very important here. We perhaps could get a little bit below it and trap, but any pullback could offer another shakeout opportunity like this. If we get another strong low like this off of these 76s, you have another 10 handle rally that could be ahead toward the top end of that market structure. So 76, the key level to continue to watch here for crude oil. Taking a look now at Bitcoin. Bitcoin right now approaching 40K even. 40,750 is the current print. Again, when we talked about this one, we mentioned the market structure here and how it continues to follow this nice market structure. We have, for example, the 40K level right here that comes across, and you could probably put it up to about 43 as well. It's kind of a fuzzy line, but 40K is that measure zone. A break through 40 takes you down to 30, the 29.30 zone right there. And the fact that we are now kind of in that fuzzy zone where we're below 43 but coming into 40, again, we've seen this thing respond here before. If there's not a response to 40, there could be a quick drop against prior market structure that takes you into this area, and that could be a big time buying opportunity below 30K. Again, if there is a response to 40K right here and we hold, then 40 to 53 could be in play, 40 to 52 half, something like that, and maybe we trade in this market structure as we did before. So right now 40K is going to be very important here in the short term. If we can find, again, a very strong reaction, we could be looking at least a 10 to 12 handle rally or $1,000 rally back toward the top end of market structure. A failure here, and we're dropping another 10K into 30K down below. Let's take a look now at Ethereum. Ethereum right now down pretty good here, 6% on the futures, and is approaching the previous quarter's low. This is where we could begin to see some reaction. Again, we talk about market structure here. 2750 is a very good zone right there. The lower edge is 1700, and then above that you got 4000. So that's basically your market structure right there. And you can see ever since it gave up 4K, it was trying here, gave it up, and now it's working down to that market structure. So very soon we may see a test down at that edge, very similar to the 40K in Bitcoin. A test in that edge right now could offer an opportunity to bounce this thing back toward 4K. And again, we could stay in that 2750 to 4K zone, maybe start to work our way higher. A failure at 2750, and now you're working down toward the bottom of value on the composite profile, and this major 1700 CLVN. Again, that would be a hard level to pass up. So right now 2750 the key level to watch for a reaction. If we get ourselves a good rejection in that zone, there could be at least a bounce back toward 4K up ahead in the near term. But beyond that, the longer term would take this thing toward 5500 or even 6700 by the end of the year. So watching for signs of reaction or rejection. Also below the quarterly low. To react below the quarterly low and return this thing back up toward the quarterly high would be a great move for the quarter. So watching for reaction in this zone coming up in the 2750 area. All right, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.